The best of money matters. Under the radar.
You're listening to Money FM 89.3, and it's now time for Under the Radar with me, Chua Tian Tian. Now, we're going to revisit an Under the Radar guest who first joined us on the show about 2 years ago. And this is a leading homegrown Singapore company that delivers what's said to be world-class communications, entertainment, and digital services. And yes, you might be using its 5G network services to tune into this conversation as we speak. Well, founded in the year 2000, telecommunications service provider StarHub seeks to provide people, homes and enterprises mobile and mixed services, a broad suite of premium content, as well as a diverse range of communications solutions through its extensive fibre and wireless infrastructure. 25 years on, the firm also develops and delivers solutions incorporating artificial intelligence, cybersecurity, data analytics, Internet of Things for both corporate and government clients. And we want to find out what is next for StarHub in a fast-evolving market as it celebrates 25 years in the business. Now, beyond that, the Singaporean telecommunications industry that StarHub lies in is also an interesting one to look at as it undergoes a market consolidation. Well, in August this year, Keppel announced the proposed sale of M1's telco business to Australian mobile network operator Simba Telecom, and that is for an enterprise value of, get this, 1.43 billion Sing dollars. The move disappointed investors who had hoped for StarHub to buy over M1. But just a day later, though, StarHub announced that it has taken full ownership of MyRepublic's broadband business. The move was set to strengthen StarHub's multi-brand and multi-segment strategy in the Singapore broadband market. But what opportunities and synergies is the firm looking to tap exactly? And how far will a consolidation in the market give telco players like StarHub more flexibility in its pricing to boost its top-line numbers? Well, a lot of questions, as you can imagine. So let's speak to the man in the top job, Nikhil Eapen, Chief Executive Officer of StarHub. Nikhil, thanks for joining us today.
Thank you, Tian Tian. Thank you for having me on the show. It's my pleasure.
Nikhil, we've briefly talked about StarHub as this local telco player that delivers what's said to be world-class communications, entertainment, and digital services. So let's hear from you. How would you describe StarHub's value proposition and business model today?
Yeah, so Tian Tian, when you really look at StarHub, what we do is we bring new value to our customers in ways that are really human. Now, that applies to our consumer business, which is half our business, as well as our enterprise business, which is the other half. On the consumer side, if you recall, the history of StarHub was that we were the first in the world to bring quad play to the market. And now we do so much more, and we bring it together for the customer. On the enterprise side, similarly, we bring together a composite of things. Cybersecurity, cloud, and connectivity, really as a single platform of our own infrastructure, which we've built ourselves, and we make that available to our enterprise customers. And it's human, it's easy, it's fast, and they can create new value for their own communities.
And Nikhil, let's talk about your customers. So broadly speaking, StarHub splits its customers into three segments: personal, SMEs, and enterprises. So what is the average deal size for each segment, and what is the split between private versus public clients? Any names that you can share with us?
So on the enterprise side, we are very much about 7-figure and 8-figure contracts. So we deal with governments and large enterprise customers. And we are really focused on bringing together our platform to bear, which is not just about one service. It's not just about one solution. It's really about bringing them value that they can use to drive value in their own right. So we operate at the large end of the spectrum. Now, also in enterprise, we have a commercial segment where the deals are typically under $1 million. And there we have, sort of a higher velocity with which we deal with our customers. We sell more single product, single solutions, and we do it pretty fast. But again, we focus on bringing value to our customers.
Okay. And talk about bringing value. I do want to take a look at the product verticals under each consumer segment. I mean, if we look at enterprise segment, for instance, there are 4 verticals: mobile plans, cybersecurity, connectivity, and cloud services. So broadly speaking, under each consumer segment, what are the product verticals underneath, and which is the most important segment for you ultimately when it comes down to financial performance, or most important vertical?
Well, consumer and enterprise are equally important for our financial performance. They're both large segments. Our enterprise segment is growing. I would say, Singaporean governments and enterprise customers, are navigating their own transformations and how to serve their customers better. So that's a growing segment. On the consumer segment, clearly that's a shrinking market, which has faced a lot of competition over the last few years because you have falling pricing, hence it's shrinking. And there our segments are, mobile, broadband, and entertainment. So yes, within consumer, mobile is obviously our largest segment, but that's not necessarily the way we look at our customers. We look at our customers as complex individuals, complex households, and we want to bring, a basket of new value to them, which comes from a range of new product.
All right, let's take a look at where things are at for StarHub right now. And Nikhil, StarHub in August 2025 reported net profit of 47.9 million Sing dollars for the first half ended June, which is a 41.7% decrease on a yearly basis. Now, this is despite revenue climbing 2.2% on the year to 1.13 billion Sing dollars in the first half.
Yeah.
That is underpinned by robust performance in broadband, regional enterprise, and security services segment. So, on the whole, how would you read into your latest performance? What is bolstering growth in the three segments mentioned earlier?
Yeah, so we were, as you said, down year on year on profitability. There was a one-off write-off that happened because we returned one band of spectrum, but we were still down about 20%. And that's a reflection of the offsets, as you point out. So we had an enterprise business that was growing quite well. And we had a consumer business that was shrinking because of the competitive marketplace, even though we actually took revenue market share. Now, on the enterprise segment, that's clearly growing, and that's clearly growing in a number of areas. Cybersecurity continues to grow with tailwinds because companies are spending more on cybersecurity. In this complex geopolitical environment, right? It's something that's unfortunately a reality of today's world. But the other area where we've grown, and we've grown quite well and grown quite profitably, is in what we call regional enterprise, and within regional enterprise, managed services. And managed services, grew about 13% year on year. And in fact, the order book growth rate is about double that. And that's really driven by the fact that, all of our customers are looking to drive smart city, smart nation use cases. All of our customers are looking to drive tech refresh, leveraging cloud more. All of our customers are looking to bolster their resiliency and cybersecurity. And that's what we bring to them. And we don't bring it to them as a systems integrator where we cobble together and we resell third-party solutions. We bring it to them as a platform where you have infrastructure embedded, you have tech and tools embedded, and you have data analytics, data lakes embedded. And we make that available to our customers. So why is that better than working with a systems integrator? Because you have end-to-end value. It's future-proofed against the new things you want to do, and it's just so much faster to deploy.
A quick follow-up question, right? The bottom line numbers, were they to your expectations, or do you think you could grow your top line further or faster to bolster your bottom line numbers? Yeah,
so I think, our enterprise business will continue to grow. So we expect to continue to offset the attrition in our consumer business. In our consumer business, we clearly want to reduce the attrition. Some of that is within our control and some of that isn't. We're very focused, and we were very clear about this at our last earnings, that we intend to continue to be aggressive. On the consumer side of the business, we have grown revenue market share. We intend to continue to grow revenue market share. And we also have some things under the hood. To try and differentiate in what is a very price-focused market by emphasizing things like quality, like emphasizing things like value, which are not just necessarily denoted by price, but the value to bring to customers overall.
I know we're talking about consolidation of the market in just a bit, and I don't want to get ahead of myself, but you've mentioned something that got me very interested. Attrition.
Yes.
Right. How far can that be attributed to pricing, to competition, and what are you doing about it?
Yeah, so the attrition in all of the players' consumer businesses, barring the fourth operator, is entirely due to falling pricing. So we have a degree of competition in Singapore, which is extreme. One of the things that I've said before is when you look at the price plans in Singapore as a percentage of GDP per capita, they're actually the lowest in the world. And in fact, our price plans are cheaper than Malaysia, right? Cheaper than Thailand, even cheaper than Cambodia. That's not a sustainable thing. So entirely due to price attrition, due to over-competition or hyper-competition, which is a disjunct from the cost structure of this economy because we are a high-wage economy. And that's a troubling thing. Now, obviously, consolidation has happened, and consolidations have typically in other markets enabled stabilization of those markets, which is a very good thing. It's a healthy thing.
I think you might have briefly talked about this earlier, but I do want to zoom in on your consumer business because StarHub's mobile business saw a subscriber growth of 8.2% on a yearly basis, driven by demand for SIM-only plans from Giga and 8. Would you say a bigger bulk of StarHub's business now is driven by B2B customers given the lower average deal size of SIM-only plans and higher competition within the telco industry, particularly so for retail mobile plans, individual mobile plans?
Yeah, so our enterprise business is actually very separate.
Okay.
And it's not really a mobile business, right? Our enterprise business is really about the platform that I talked about, modern digital infrastructure, which really brings together 5G mobile, together with fiber connectivity, together with broadband and optical networking, and fuses them together on hybrid multi-cloud. So it's a very, very different thing. So now on the attrition on the consumer side, so putting aside enterprise, on the attrition on the consumer side, what you're essentially seeing in the market is customers with the unbelievable low prices that are available in the market from no-frills providers are opting to move out of the premium segment and move to what we call the value segment. Now, that doesn't happen forever because there are still many customers who value, device plans, who value quality, who focus on value broadly defined other than just price. So we see a natural bottom in the premium segment. And the good news is the premium segment is really only two players, ourselves and the incumbent. But yes, that's what's been happening. People have been opting for to move to the value segment because the prices are just too low to resist, right?
Okay, don't mind me putting this question forward.
Yeah.
How do you define quality? Because value is straightforward, it's about the numbers, but how do you define quality? Because some of the users who are using plans from the incumbents, the two players, for instance, would say that, hey, sometimes my 5G connectivity, I'm in a 5G space, I don't get connectivity at all. Sometimes my phone just switched to no mobile data available for some reason. How do you define quality then?
Yeah, there are always going to be blind spots for connectivity in any market, in any city. I think we're very lucky in Singapore. We actually have the best mobile performance and coverage, probably one of the best in the whole world, as mentioned by speed and coverage. And I would say within that, clearly two players have the best quality. The number one operator and ourselves. It's what we've always focused on. So network performance and coverage is part of that. But there's also another interesting thing which is nuanced, which is experience of the network.
Okay.
So it's network quality is one, but experience of the network is a different thing.
What do we mean by that?
Experience of the network means, how well do we know you as a customer? How well do we know how you interact with our network? And how can we leverage our network capabilities plus AI plus automation to bring you an elevated experience of the network? Now, that's something that is very much under development because, now we have cloud, now we have AI, our network sits on cloud, we have AI embedded. So I think you'll start seeing more and more of that. The other element which is quality, and again, this is something that, of course, customers always complain about because customers, customers are always right? And customers want perfection, which is absolutely correct, is service experience. And there, again, I think this is something that's under evolution because there's new tech and new tools. Again, our platforms sit on the cloud. We have very rich data on our customers, and we have ways, to reach out to our customers digitally. So what we want to do is engage with our customers with service that feels very, very personalized and very, very intuitive. And therefore, when it's personalized and intuitive, we want to make it joyful and very human. So that's the other part of the journey. So I think that's what you're going to see, more from us over the next few months and year and beyond. And that's what we mean by quality. And value also, because value is, how do you define value? Do you get something just at the cheap price or do you get more things at a higher price?
Okay. I suppose we'll see more of the specific features coming up in due course. But here's where it gets interesting, Nikhil. Let's talk about the Singapore telco industry that StarHub lies in.
Sure.
as it undergoes this market consolidation, I mean, August is an interesting month. Keppel announced the proposed sale of M1's telco business to Simba Telecom for an enterprise value of 1.43 billion Sing dollars. And the move disappointed investors who were hoping that StarHub and your team would buy over M1. Before we get to StarHub's acquisition of MyRepublic's broadband business, are you personally disappointed at not being able to buy M1, or could this be a blessing in disguise per an opinion piece by the Business Times, what it has suggested?
So personally, I am actually quite pleased and relieved a consolidation has happened. Consolidations have generally proven to result in a healthier sector for the service providers in the sector, and a healthier sector for consumers. So a consolidation has happened. M1, I think, was a little bit sandwiched between Singtel and ourselves and Simba, sort of in between. So I think it's a good consolidation that has happened. Now, whether it results in a healthier environment, I think is not 100%. And it's something that has to be watched carefully. But what you want to see is a sector which, through its fundamentals, allows for not just the lowest prices, because that's not sustainable. And certainly not sustainable in Singapore, where, we have the fifth highest per capita income in the world, right? And a certain cost structure, and it doesn't need to be. But one that really fosters investments in innovation, investments in developing the sector further and developing new value, as I talked about. We also need a sector that not only fosters innovation, but also invests in really, really important things like quality, resilience, and then, of course, cybersecurity. So cybersecurity, we're really, really passionate about. It's something that's a bit existential with the geopolitics of the world that we're living in. And is something that is very close to our heart, and we want to make sure this is a safe world and bring peace of mind to our government, enterprise, but also our consumers. And that doesn't happen in a struggling sector.
I know you talked broadly about the sector, and I know there are sensitivities involved, but if I can try my luck, are you personally disappointed at not being able to buy M1, or do you think it might be a blessing in disguise?
No, I'm pleased and relieved a consolidation has happened.
Okay.
Because I think there's light at the end of the tunnel towards a healthier sector, healthy defined as all of the things I'd mentioned, innovation, quality, resilience, cybersecurity. And I think now at least there's a possibility. So how we navigate towards that, better future as operators is more within our control.
Okay. And just a day after M1's announcement, Nikhil, StarHub said it has taken full ownership of MyRepublic's broadband business, and the move was set to strengthen StarHub's multi-brand, multi-segment strategy in the Singapore broadband market. What opportunities, what synergies are you looking to tap exactly?
Yeah, so MyRepublic's a really great company. And this is MyRepublic Broadband, by the way, where we have acquired 100%. And MyRepublic Broadband is a really great and unique company because it really owns its segment. And its segment is a really great segment. So we call it the digital savvy segment. I think the people in that segment identify themselves as, gamers, or geeks, or people who are just very, very techie, right? And they're very demanding. They want, really great broadband quality, which they get from MyRepublic. They want really fast speed, which they get from MyRepublic. And they like an element of creativity and, add-on products, which they get from MyRepublic. So with MyRepublic, we have the ability to take this great company, which owns its own, very high-value segment, and do more with it across StarHub. To harness a little bit of that MyRepublic special sauce and do more of it within StarHub. And then on the other hand, we are obviously going to put more resources, muscle, behind MyRepublic. Okay. So really put it on steroids.
Okay.
Yeah.
Now, if you're just tuning in, we're in conversation with Nikhil Eapen, Chief Executive Officer at StarHub. Let's talk about integration, Nikhil. How do you intend to integrate the Kings with integration and capture more market share? I mean, if we go back to M1 and Simba, some were saying that, Simba is swallowing someone bigger size, M1, and there might be challenges, right? Do you think in that case, this is a good time for StarHub to gain market share if you do your integration correctly with MyRepublic?
Yeah, so on broadband, frankly, when you look at the broadband market, we are the number one player. We have a revenue market share, and we only look at revenue market share, which is at about 43, 44%. Singtel's at about 41, 42%. So between the two of us, we have about 85% revenue market share. So yes, we always focus on revenue market share, but we're already at pretty high levels, right? So really what we're focused on with MyRepublic, again, is integrating, leveraging what MyRepublic means to its high-value segment and customers and doing more with that. So bringing them more value, and the quid pro quo for bringing them that segment more value is obviously monetization on our side. We look to grow revenue with MyRepublic, and we look to grow revenue by giving them better support to serve their segment better. But MyRepublic, but we're very focused on that segment. We're not looking to go too broad spread and do things which we're not necessarily good at. We want to do what we want to do, and we want to do what we do well. And we're the number one player in the broadband segment. We're not a challenger, but we are a micro challenger, and that we're also challenging ourselves to bring new value to our customers.
Now, should both of the acquisitions that we talked about go through, how would that change up the competitive landscape for the local telco market, particularly if we look at consumer telco and mobile business? How far will that return pricing power back to StarHub? And how would you use that pricing power, to improve your top line while reducing churn rates?
Yeah, so thanks for the question, but I don't think we're really honestly focused on pricing power. I think, as I mentioned, you have two consolidations that have happened, as you point out, in mobile and broadband. On the mobile side, you still have some MVNOs. I think that's going to be a challenging business model because they pay out a large part of their revenues as revenue share, so the cash flow is thin in a competitive market. So you may well see either smaller players fall by the wayside or get absorbed by the larger players. And that's a healthy thing because it's not necessarily about pricing. It's about being able to drive those things that I talked about, innovation, broader value, resiliency, cybersecurity, which are really, really important things. So I think it's more about consolidation, creating the conditions to achieve those very important things rather than just about price. And as I said, I think, yes, you'll probably see a few more kind of smaller consolidations happen along the way.
So it gives you more room, more flexibility and more scale to invest in a way.
I think provided the market moves to a posture which is more towards quality, value, innovation, cybersecurity, I would say, yes, that's a good thing, not just for us, but for the other operators.
Do we see the market moving in that direction right now?
The consolidation hasn't closed yet.
Yeah.
And then beyond that consolidation and when it closes, we'll just have to see.
Okay.
But it's what's generally happened in other markets that have consolidated. But we'll have to see. But between now and then, as we've said very clearly to the markets, we intend to continue to be quite aggressive, particularly in the mobile segment, but in consumer broadly, to continue to take revenue market shares we have over the past 8 quarters.
And I do want to dedicate the last, portion of our conversation back to what's going on at StarHub. After all, 2025 marks StarHub's 25th year since its founding.
Yes.
How has the company transformed itself through the years in this fast-evolving market? What is your vision for long-term growth? What are the trends to invest in? How are you capitalizing on these trends?
Yeah, so when you look at the formation of StarHub and its first few years, I would really say its first 10 years, StarHub was very much of a challenger.
Yeah.
Right? And StarHub challenged not just the incumbent or the first 2 operators, and in fact, it overtook M1, if you recall, right? But StarHub, also challenged itself in bringing new value to customers. So there were new types of mobile plans. But there was also very different ways of bringing new value. As I said before, StarHub was the first in the world to bring quad play to consumers, the first in the world. So I think there was an intervening period where perhaps the challenger period didn't hold so strong. And I would say over the past few years, the challenger spirit is definitely back.
Okay.
And it's definitely thriving. It's a bit same but different, right? As we always say, same but different.
It's a different battle at this point.
Same but different. Same in the sense that the ethos is still there of being a challenger, bringing new value to our customers, challenging ourselves to bring new value to our customers. The different is, the technology and the tools that we've brought on board. We've moved, our IT and, by the way, our network to run off hybrid multi-cloud. We have, data lakes and AI, kind of embedded in our infrastructure. And by using a lot of those things, we are bringing new value to customers in different ways, not just necessarily about price per se, but really in ways that are, where we take complexity and make it simple for our customers, both consumers and enterprises.
And Nikhil, you've also mentioned that StarHub completed its investment phase of its DARE Plus transformation program and has expanded its cost structure optimization efforts through this multi-year cost management program.
Yes.
How far does this bode well for the firm as it sets its sights for the long-term or long-term sustainable growth for that matter?
Yes, so absolutely. So we've finished our investment phase, or what we call our build phase. So our platforms are in place, our hybrid multi-cloud platforms, and various other things, data lakes, data analytics, and so on. So now we don't talk about transformation anymore. So actually at StarHub, one of the things that we say is no more talking about transformation and no more talking about BAU. So it's continuous evolution. So we're in this period of continuous evolution. Part of that is about cost. As you've seen, we've magnified our funnel of cost opportunity. Not only decommissioning legacy systems, but really driving more network automation, reorganizing, how we serve customers to simplify and create efficiencies, and then also reorganizing and re-architecting our IT systems, which can free up a lot of cost. So we're going to do those things, but also continuous evolution means, again, going back to the same thing. Bringing new value to our customers, and in doing so, doing it in a way where we are, leaner, faster, sharper, smarter, where we know our customers better, and we bring them truly new value that they appreciate, and perhaps open up some new frontiers for them, right? That they never perhaps thought possible.
And before I let you go, Nikhil, what are some future plans for StarHub for the rest of this year and into the next? If we could get more granularity, what can we expect out of Singapore in particular?
Yeah, so we've been very clear about the pillars that we will be focusing over the next, 6 to 12 months. Number one, notwithstanding consolidation, and we'll have to see what happens. We intend to continue to be very aggressive in the consumer marketplace because we want to force the right outcomes. We want to help force the right outcomes that come out of consolidation. So we will continue to be aggressive to take revenue market share. We will continue to double down and grow our enterprise business. That's been growing well. We want to keep that growth going. And we want to add to it, right? Both, organically as well as possibly inorganically. Number three, as I've said, cybersecurity is really, really important. I think we've all seen a lot of the news flow around this. And we are continuing to invest, aggressively in cybersecurity, to bolster our own position and defenses, but also to safeguard the way in which we serve, our government and enterprise customers, as well as our consumers. So that's our third pillar. And the fourth is we want to, continue to get better and better, leaner, smarter, faster, sharper, more efficient, more like a sort of an elite team, but with AI, data and cloud at our disposal. So when you take all of that and you look at what it means for Singapore, as I said, number one, I hope for a healthier consumer sector, which fosters, innovation, quality, and the right things. Number two, I think for Singapore, companies like us that enable and perhaps even accelerate, enterprise transformation to this new world, where they can, we can all work on making Singapore a truly smart nation, bringing new value to our customers. That's a really important thing. And then again, I keep banging on this cybersecurity. It's a complex world, and we all need to do our part. And StarHub certainly will do more than our part in helping to keep our customers safe.
All right, thanks so much for the insights today, Nikhil. That was Nikhil Eapen, Chief Executive Officer at StarHub. Thank you so much for joining us on Money FM 89.3.
Thank you. Thank you so much, Tian Tian, and thank you for giving me the time.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.